You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 2nd day of April 2024. 13 more calculating days. Special tax day. Just a friendly reminder. So, if you're not on it, get your people on it. Or get your people's people on it. Wherever you're at on the food chain, you'll figure it out. Hey, thanks for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. You may have missed the first one because that is private. First live broadcast, 2 hours and 10 minutes every trading day, is private. Members only, and those who are taking their 1 week free trial. If you haven't taken your 1 week free trial, all you have to do is go to mytradingiq.com. And at the very top of the page, there's a link that says 5-day free trial. No credit card required. Click the link, fill out the registration form completely, please. It's an automated process, so if you don't completely fill it out, then, well, we don't get it, and the free trial never happens, okay? Now, it's important that you understand. There's no credit card required. You don't need your mother's maiden name, any of that stuff. We only ask you for the important stuff that we do need to initiate your trial. Also, you're not just getting access to the live training room, you're getting access to every resource that our passport holders have access to for 5 consecutive trading days. If you sign up today, then there's a very high probability that today we will get your desktop set up and your indicators indicating, and your trial won't start until tomorrow morning when the live training room opens. Now, that leaves only 3 days in the week. Wah, wah. So you're going to get shortchanged 2 days? No. You're actually going to get 2 extra days because the weekend doesn't count against you. So you get 3 days this week, then you get the weekend, then you get 2 days next week. That's 7 days. So don't allow the day of the week or weekend or hour of the day hold you back from signing up for the trial. And remember, we're footing the bill. We call it a free trial because that's very attractive, but it's really not free. It costs us in time and resources, even money, but that's okay because we want you to be able to take a look from the inside out. See, right now, many of you are on the outside looking in. You got your nose pressed up against the glass, and you're looking at all of us traders inside this fishbowl. Come on, get in the water, okay? If you want to learn how to trade for a living, the only way you'll ever learn how to trade for a living is to learn how to trade. And that's never going to happen just watching other people trade. So, during your trial, you're going to get a demo account, you're going to have a platform, and you're going to trade along with Michael as he's teaching you each one of those 5 days. Now, you're going to learn everything you need to know in 5 days? No. Short answer, no. However, you're going to get enough information and you're going to learn enough that at the end of the 5 days, you will be able to make a well-informed and intelligent decision as to whether or not trading is right for you. Now, each day when the live training room ends, that private broadcast, take a 30-minute break and we come back for this broadcast, the afternoon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's a couple different ways to join the afternoon broadcast because we are simulcasting. Now, the best way, because you only have to do this once, go to mytradingiq.com and scroll down the page to where it says afternoon broadcast. Click that link, fill out that 30-second registration form. You're done. It's going to get you into our room that day, and every trading day going forward, you're going to get an email. That email will have a link in it. At 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. Now, the benefit of that is you'll have access to the question box. You'll be able to ask questions and participate in the discussion. Now, keep in mind, whether it's the live training room or the afternoon broadcast, whatever you type in that question box, nobody sees it except myself, Michael, and Bert, if he happens to be here. So don't be shy. If you have a question, ask, get the answer. The only way at the end of 5 days you're going to be able to make a well-informed and intelligent decision if trading is right for you, okay, is if you've asked all the questions that you have and gotten a solid answer that actually makes sense. Now, this afternoon broadcast, which is open to the public, you've got, once you do that registration for this broadcast, you're good for life. Whether you ever become a passport holder or not, you'll still have access to the afternoon broadcast. Lots of folks got their start that way, tuning into the afternoon broadcast, and over time realizing, hey, what these guys are doing kind of makes sense. And they're doing the same thing every day, day after day after day after day, so it must be working. So some people come in through the outdoor, so to speak. Anyway, that's one way to join the afternoon broadcast live. The other way, let's say you're out of the office, away from the desktop, still want to join live, you can via our YouTube channel. Also, there will be days when you're busy and can't join this broadcast live, but you do want to get caught up later on. You can do that too on our YouTube channel, which is easy to remember. youtube.com/CFRN. Right there. You already know the YouTube part, so all you have to really remember is the CFRN. Now, not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily episode. Currently, there are over 2,400 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Now, we have some folks that have been with us since the beginning. but others have come along lately, right? So thanks to the power of YouTube, you can scroll back 6 weeks, 6 months, 6 years, even 8 years. And just, pick some days at random. Doesn't matter which ones. Listen in a little bit, fast forward a little bit, listen in some more. You'll discover the thread of connectivity, the thread of continuity that's woven through each and every daily broadcast. youtube.com/CFRN. So we're going to open with our daily devotional and a word of prayer, as we do every day. Then we'll get into the markets. Then about 12:45, 12:50, Michael will join us. He'll give us a recap of what happened in the live training room this morning. Then we'll go live on the TradingView platform for 30 minutes. 30 minutes of live trading. And then I'll come back and wrap things up with our good word for the day. Now we're wrapping up our current topic, which is how to hear the voice of God. Today's scripture is Philippians 1, verses 3 through 6. And I'm going to share from the Message translation. Every time you cross my mind, I break out in exclamations of thanks to God. Each exclamation is a trigger to prayer. I find myself praying for you with a glad heart. I'm so pleased that you have continued on in this with us, believing and proclaiming God's message from the day you heard it right up to the present. There has never been the slightest doubt in my mind that the God who started this great work in you would keep at it and bring it to a flourishing finish on the very day Christ Jesus appears. Again, that was Philippians 1, verses 3 through 6. So on our final day on this topic, what God wants us to hear the most. You aren't the mistakes you've made. We've all made mistakes. Some of us have made some pretty horrible and horrific, even life-changing mistakes. But we are not our mistakes. Our past does not define our future. You aren't the labels that other people have put on you. And you aren't the lies the enemy has tried to sell you. You are who God says you are. Who does God say you are? He says that you are His child, a child of God. You are the apple of God's eye. You are sought after. You are more than a conqueror. You are a new creation in Christ. You are the righteousness of Christ. All our identity issues are fundamental misunderstandings of who God is. Guilt issues are a misunderstanding of God's grace. Control issues are a misunderstanding of God's sovereignty. Anger issues are a misunderstanding of God's mercy. Pride issues are a misunderstanding of God's greatness. Trust issues are a misunderstanding of God's goodness. If you struggle with any of those issues, it's time to let God be the loudest voice in your life. God doesn't love you because of who we are. God doesn't love us because of who He is. When we succeed, God says, I love you. When we fail, God says, I love you. When we have faith, God says, I love you. When we have doubts about our faith, God says, I love you. Borrow a line from a very popular song right now. You will never be more loved than you are right now. Whether you're on death row or in the Oval Office. Love is His answer to everything. Why? Because God is love. There's nothing you can do to make Him love you any more or any less. God loves you perfectly. He loves you eternally. God wants us to hear what He's saying, and we must heed His voice. But much more than that, He wants us to hear His heart. So He whispers softer and softer so that we have to get closer and closer. And when we finally get close enough, He envelops us in His arms and tells us that He loves us. We've been deafened by the voice of conformity, the voice of criticism, and the voice of condemnation. And the side effects include loneliness, shame, doubt, and anxiety. The good news, you not only bear God's image, but you know His voice. It's His voice that knit you together in your mother's womb. It's His voice that ordained all your days before one of them came to be. It's His voice that began a good work, and His voice that will carry it to completion. One of the greatest reasons that we don't hear the voice of God is because we don't want to hear what He's saying. We proclaim that we want to hear the voice of God, and He's speaking, and we're hearing, but it didn't line up with what we wanted Him to say. And so we're like, I can't hear Him. Can't connect. When you come before God with a broken and contrite spirit and pour your heart out and say, God, I want nothing more than an intimate relationship with You. I want to wake up thinking about You. I want to spend my workday thinking about You. I want to fall asleep thinking about You. That's the kind of relationship I want with You, God. Now, He's going to answer that plea. But He may not answer it the way you want Him to answer it. There may be some things in your life that have to change. Perhaps there's some people that you need to distance yourself from. And there are probably some people that you need to draw closer to. So when you ask for God to speak to you, be willing to not only be a hearer of the word, but also a doer of the word. If you will, you'll open up those lines of communication, because God has much to tell you, much to share with you. Remember, He knew you before He formed you in your mother's womb. He created you for a purpose and for a destiny. And it breaks my heart to know that so many people spend their 70, 80, 90 years here on planet Earth and never connect that divine purpose. It's not because God hasn't tried. It's not because God hasn't sent His message your way. It's because you didn't like what you heard. And you know, we can build up spiritual earwax that eventually just blots out the voice of God. So let me ask you, where do you feel right now in your heart that God is leading you? How is God talking to you? If you can't hear His voice, or think you can't hear His voice, consider spending more time in His Word on a regular basis, and then just spend some quiet time with Him. See, when I think of prayer and talk about prayer, I think of it as a two-way street. If I've got 10 minutes, what I have to say is not that significant. God already knows my wants, needs, and desires. So maybe I spend 1, 2 minutes thanking Him, blessing His holy name. The majority of my prayer time, 80 to 90%, is just being still, knowing that He is God, and listening to what He has to say. Because when He's done saying it, I'm going to get up and go do it. Join me in a word of prayer. Heavenly Father, we come before You today with hearts full of gratitude. Just as the Apostle Paul expressed in Philippians, we thank You for the precious gift of fellowship and partnership in the gospel. Lord, we thank You for the faithfulness of our brothers and sisters in Christ. We are grateful for the love and support we find in our Christian community. Thank You for the ways You have worked in and through us, and for the progress we have seen in our faith. We pray, Lord, that You would continue the good work You have started in us. Strengthen our resolve to walk in obedience and to follow Your leading. May Your Spirit empower us to live lives that bring glory and honor to Your name. Help us to be filled with joy and confidence, knowing that You, who began a good work in us, will carry it on to the completion till the day Jesus comes back. Thank You, Lord, for Your faithfulness. and your steadfast love. May we continue to grow in grace and in the knowledge of you. May our lives be a testimony to your transforming power. It's in Jesus' name we believe and pray. And everybody said, amen. Amen and happy Tuesday. Now, it's a red Tuesday. Let me just warn you. In fact, it's Tuesday and we're at some of the lowest weekly trading zones for the week. And I heard some questions this morning in the live training room. Well, what do we do now? Well, here's the deal. We've published the weekly trading zones since December 14th of 2009, almost 15 years. Now, over all those years, has there ever been a week that closed below the lowest weekly zone or above the highest weekly zone? Yes. Yes, there have been a handful. Maybe 2 handfuls over all those years. Okay? However, what history has taught us is if price hits the lowest weekly zone by Tuesday morning, there is an incredibly high degree of probability that by the end of the week, we'll be at the other end of the spectrum, or well on our way to the other end of the spectrum. Is that 100% guaranteed? Sorry, no. I have to be honest with you, okay? But that's where our thoughts are. That's where our plans are. It was talked about in the live training room this morning. Michael perhaps will bring it up again this afternoon. Well, let me give you the numbers. And then I think I got an article I want to share with you. Maybe not. We'll see. All right. Right now in the U.S., the Dow, these are the cash markets, the indices. The Dow's down 462 points. And I think I messed up the lowest weekly trading zone on the Dow, but I've made it a mandate, I guess. I don't know if that's the right word. Once I publish the zones, I don't change them. If I made a mistake, I made a mistake. So I'm just going to leave it and we'll see where we end up for the week. Okay? Because the distance between the next to the last zone and the lowest zone, it's usually the widest. And this week somehow it came out the narrowest. So I think I had my mind on something else Sunday afternoon, Sunday evening when I was working on those. But hey, now you know. All right. So the Dow down 462 points, almost 1.25%. The NASDAQ down 209, over 1.25%. The S&P 500 down 50, almost 1%. But hold on to your hat. The Russell, our man in the street, down 44 points. That's over 2%. I don't remember the last time the Russell fell that far, that fast. In the commodity basket, crude oil is singing a different song. Up 88 cents, make that 90 cents. Trading 84.61 last. That's a gain of over 1%. Gold up $19, make that $20.10. Trading 22.7720 last. That's a gain of almost 1%. Silver, oh, you gotta love it, up 80 cents. You're like, this guy's getting excited over 80 cents? Well, you see, when the price of silver moves $1, that's worth $5,000 per contract traded. So yeah, I'll take 80 cents any day. Last print 25.87.5. That's a gain of over 3% for silver on the day. And the Asian markets at the close. Nikkei posted a gain of 35 points. Shanghai dropped 2. Hang Seng gained 390. That's almost 2.5%. And in the European markets at the close, looking a little more like the US markets, FTSE down 17, DAX down 209, which is a little over 1%. The CAC down 75, which for the CAC is almost 1%. So that gave us a mixed day in Asia. It was a red day for the UK. So far, it is a big red Radio Tuesday here in the US. Those are the numbers from around the world. Now let me look and see which. Oh, I'm sure most of you don't smoke, but if you smoke menthols, you're in trouble. There's a lawsuit seeking to force the ban on menthol cigarettes after months of delays by the Biden administration. You know, I'm actually amazed that they still sell cigarettes. I mean, they'll always be available because anybody can grow tobacco in the right climate. And of course, you would sell it on the black market, but that's a story for another day. As I look through here at my headlines, trying to see if there's anything that I usually do this ahead of time. But all right, this might be worth sharing. Yeah, I don't know. This is a powder puff piece. Stocks and bonds dropped around the world as solid economic readings and a rally in commodities spurred speculation. Major central banks will keep rates higher for longer. Hey, wait a minute. Can we not trust the Fed, who just recently sent the markets to new all-time historic highs on the promise that we were going to get 3 rate cuts starting in June? In a revival of the good news is bad news trade, Tuesday's better than estimated readings on U.S. job openings and factory goods orders kept markets under pressure. 10-year Treasury yields hit the highest levels of 2024, putting further pressure on equities, a market which had been ignoring the hawkish repricing of rate cut bets over the last few months. Aside from the macroeconomic picture, valuation concerns after a torrid rally have spurred calls for a pullback. Now, when we go to the charts, you'll see that price has hit the BBC on the daily chart. Now, that's a big deal. We're either going to trade through it or we're going to bounce off of it. So far, we're not seeing too much in the way of a sign of a bounce, but the week is young. Stock bulls may find it difficult justifying buying stocks at these elevated levels as yields rise. Rising crude oil prices pose additional risk to the inflation outlook. Additionally, numerous jobs reports are expected throughout the week. Trading could be volatile. Following better than estimated data around the world, Citigroup's Economic Surprise Index. Who knew they had an Economic Surprise Index? That's like two guys standing on the street corner and there's two birds up on the telephone wire. Some of you are old enough to remember telephone wires up in the air. One guy says, I bet you the bird on the left is going to fly first. And the guy says, okay, I'll take that bet. So he's betting on the bird on the right. Sounds like a whole lot of gambling going on to me. But I'm just going to have to trade in front of me. But what I won't be trading is the Economic Surprise Index, which measures the difference between actual releases and analyst expectations, and is now hovering near the highest level in about a year. Remember, now, despite this week and this week's zones, I am looking for a substantial retracement in the markets, at least back to the 50% Fib retracement from the current all-time high to the low put in back on October 27th. I'll show you that on the chart in just a minute. I anticipate a 50% retracement. And if that happens this week, boy, will the zones be wronger than they've ever been. They're usually pretty reliable, okay? They come out Monday morning, 6:15 a.m. Eastern. Everybody gets them on their charts before Wall Street wakes up for the week. And they do provide some really solid guidance. So if we close below them or whatever this week on any of the markets, will that change anything in any way that I do the zones that I've done for the last almost 15 years? It's a huge no. Now, I can't tell you that this is the day that the dam breaks and we see red after red after red after red days, but I am telling you it could be. So, anyway, the S&P fell at 1%, while at the time this article was printed, while the tech-heavy NASDAQ 100 underperformed, with Tesla leading losses in the mega caps. 10-year yields rose 5 basis points. Oil hovered near $85 for the first time since October. Copper rallied back above $9,000 a ton. And gold hovered near all-time highs while Bitcoin took a bath. The latest job openings, which precedes this coming Friday's payroll data, suggests labor demand is stabilizing at an elevated level. Whoa, whatever that means. Combined with low jobless claims, the March jobs report will likely surprise to the upside again. That's according to the chief economist over at Apollo Global Management. The U.S. economy's ability to resist headwinds has been remarkable, according to Bankrate. The timing of a rate cut remains uncertain. Economic strength signals indeed have triggered a pushback in expectations of the first Fed cut. Odds that the central bank will lower rates at the June meeting or a coin flip at the moment. And let's just end it there, because it's depressing. And we don't have to be depressed. Let's look at this. This is kind of depressing, but we'll look at it anyway. Logic 247. That's our 24/7 around-the-clock E-mini alert service. It's not just E-minis. It's also crude and gold and silver and euro and bonds. We're in week 296. over the last 296 weeks, we've issued over 16,300 individual handcrafted alerts. In fact, I think we're closing in on 16,400. But since the markets opened Sunday night this week, we've issued a total of 16 alerts. Still waiting on the outcome of 5. We had 11 actionable alerts, of which 2, or 18%, would have been stopped out based on market structure, but a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Now, over the last 296 weeks and 16,300 plus alerts, we've averaged on a weekly basis 20% or less of the alerts being stopped out, again based on market structure and that very simple process I teach all of our passport holders in their one-on-one mentoring sessions. So on a percentage basis, we're okay for the week. Last week we ended up with 17%, and yesterday we were at 17%. So, okay, now moving on. The logic alerts are based on current price action. So they can come out at 2 a.m. or 2 p.m. whenever opportunity presents itself. Now that's because futures trade around the clock and we have traders around the globe. Our day session is their night session and vice versa. Unlike the Logic 247 alerts, which can come out at any time, the Concierge Trade Alerts, or the CTAs, our original alert service, they're posted as a static report shortly after the Globex opened each evening. So last night, 10 minutes. Let me say this for the benefit of those who may come from the world of equities. If you're a stock trader, then your trading day begins Monday through Friday at 9:30 a.m. Eastern. And then at 4 p.m. Eastern, you clock out. Futures trade around the clock. Now, we all know today's the Tuesday session, whether you're a futures trader or a stock trader. But for futures traders, the Tuesday session began last night at 6 p.m. Eastern. Now, this afternoon, stocks will stop at 4 p.m. Futures will stop at 5 p.m. Eastern. And then tonight at 6 p.m. Eastern, the markets will reopen. That will be the beginning of the Wednesday session, even though it's still Tuesday night here in the U.S. So, all of our members and all of our trial members had these targets 10 minutes after the open last night. Now, since this broadcast is open to the public, if you want to grab a screenshot, you can. If you're watching after the fact on our YouTube channel, youtube.com/CFRN, just hit the pause button on the video and jot down the markets that are important to you, because we're going to walk through each and every one of these markets before the broadcast ends today. Now, the first thing you do when the report comes out, go to the 30-minute chart of whatever markets you actually trade. Using the ES as an example, you want to go to your 30-minute chart, whether you go there at 6:10 or you don't get there till 9:10. Make a note on your 30-minute chart where price was at the time the report came out. Then on your 30-minute chart, draw a line in the sand at the long target and a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. Now, if price gets above the 30-minute BVC, then it's attempting to reach the long target. If price gets below the 30-minute BVC, it's attempting to reach the short target. Now, the BVC is the green line you'll see on my charts. It stands for bull, bear, cross. When price crosses above the green line, we're bullish and anticipate higher prices relative to whatever time frame we're looking at. If price gets below the BBC, we're bearish and we anticipate lower prices, again, relative to whatever time frame we happen to be looking at. But for the purpose of the CTAs and the Logic 247 alerts, all alerts are created on the 30-minute chart. With the Logic alerts, you'll notice that there are often multiple targets. You have an entry price, you have an initial target designed to help you get your goal for the day, and then you'll often have 2, 3, 4, 5 more targets, then a final trade to target. If it's a short alert, the final trade to target will be the weekly zone below. If it's a long alert, the final trade to target will be the weekly zone above. With the CTAs, you get to look left yourself. It's part of the training process. The purpose of the alerts is not so you can just trade them and not have to worry about learning how to trade. I know some people use them that way, but there'll come a day when they regret that, because that's not what they're intended for. They're intended to help you learn how to read the charts, how to understand how price flows the same across all markets and all time frames. Don't make the mistake of passing up on the opportunity to learn a very valuable life skill: how to trade. Once you understand how to trade, you can trade anything. Futures, individual stocks, crypto, Forex, ETFs, because price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. That cycle has been in place since the inception of the markets. It will remain in place till the markets cease to exist. Why? Because that's how markets work. All right. Sounds like Michael has arrived. So we'll pick up with this when I come back. Michael's going to give us a recap of what happened in the live training room. We'll go live on TradingView for 30 minutes. And then we'll get into the recap. We'll look at the daily chart. We'll see all the things that I've hinted at so far. We'll dive into the charts and take a good close look at them. All right, Michael, looks good.
All right, here we go. Good afternoon, everyone. Today is Tuesday, the 2nd day of April, 2024. Now, if you have not taken a free trial with us, go here to mytradingiq.com, and right here is a sign up for your free 5-day training. Now, 9:15 to 11:30. Click on that button, okay, and it's going to bring you to this page. Just fill out this little form. Really simple form. If you have Ninja, give us your machine ID. If you have TradingView, give us your TradingView login ID. First name, last name, email, phone number. Easy stuff. Takes you 30 seconds, less than 30 seconds, probably 10 seconds to fill that out. Just give us that information. We'll set you up with the trial and get your indicators indicating. Okay. Now, today we had another pretty slow day today. We do have some high impact news coming out on Friday, and I'll go into some stuff here in a few minutes when I get into the charts. But I expect we're going to see a lot more volatility as we work our way into the rest of the week, and hopefully have more trade opportunities. But anyway, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. On the NQ, we're -3 ticks. On the Russell, +34. Nothing on crude, +7 on gold, and -9 on the ES. I put us at 112.50 this morning. Today it took 14 minutes before trades to get to $1,840, and we were up we took a total of 14 trades this morning. So far in the month, pretty slow so far. We're at $232.50. So over 2 business days, averaging $116.25. And on the year now, we're at $23,222. So over 63 business days, averaging $368 per contract per 2-hour business day. Now, if you were to quit trading when you get your goal for the day and you would add 1 contract per month, that is the 24/20 blueprint. Now, I started the blueprint in January of last year, so I'm in my 16th month, 16th contract. However, if you started it this year, in January of this year, this is what you would be doing right over here. Right, so for me, actually for anybody, 25.5 hours, 25.55 hours so far this year is what you should have traded. Getting the goal for the day if you did everything like I did. Now, it would have been quicker than that with fewer contracts, but we'll just say it's the same. I'm averaging $4,817 per hour doing the 24/20 blueprint. I'm in my 16th month of it. But if you started this year in January with 1 contract, the 24/20 blueprint from scratch, so far you'd be averaging $688 per hour. Okay, so I'm a full, well, this is 4 months, so I'm a full year ahead of that right now. Okay, and that's where you could be if you were to do everything by the 24/20 blueprint. All right, let's get into the actual trades now. We'll get into the actual trades. Here we go. Start out with the gold. On the gold, which we have on gold, we had 2 trades today. 1 break even and 1 +7. Okay, now gold was jumping around pretty good today. Let me shrink this down a little bit like that. Spread it out. There we go. Okay, so here was our first trade on gold. We ended up with a break even on that trade. It got really sideways and choppy in there. Then we got all the way over here, and we had our second trade on gold, which was right here. This we picked up 7 ticks on. It went all the way down here, which was nice. And I believe that was it for the gold for us. It got really sideways through here. We can trade it again, but we had a nice blue arrow right there during the break, another nice blue arrow right there during the break, and another blue arrow right here that was good enough to get you some profit or a break even. This one here would have stopped you out, right? So again, if you had that one or that one, you didn't need to worry about the stop out because you shouldn't have been trading. If you had that one or that one or that one or that one, that would have been a break even. If you're just doing the blue arrows, if you're just a blue arrow kind of guy, there was plenty of opportunity today on the gold to get your goal for the day. All right, and that was gold. And now the Russell, let's see, on the Russell here, we had, let's slide this all the way back here. All the way back here. Okay, on the Russell, we started off here. Our first trade on the Russell was 11 ticks. Right there. The next trade on the Russell was right here. This is where we got the goal for the day. That was 12 more ticks to get us to 23. Then we had another one right there, added another 10 to get us to 33. And then I missed that. And I missed that. And it looks like I didn't trade again for a little while here. We had another one here. We went from 33 to 34. So I had 1 tick right there. And that was it. So I missed some really nice trades on the Russell this morning. During the break, there were a couple of green arrows right here that worked out okay. And it's just gone into a sideways pattern right now. On the ES, we had a few trades on the ES here. We had a break even, then we had a +1 tick there, and then we had a -10 ticks right there. Now that was coming out of the weekly trading zone. It didn't go 4 ticks into profit, so I did everything right on that, and it just stopped me out. It hasn't done anything since then. Okay, the market seems to have settled down quite a bit here since 11 o'clock. But getting to the NQ, now this is 2 days in a row that we barely got anything on the NQ. We actually ended a little bit negative today. We ended up at 0 yesterday for the NQ. So by the end of the week, I suspect we're going to be bouncing on the NQ here. Now let's see. We started out on the NQ right here. I guess this was our first trade. I missed all those blue arrows right there. I took this one. Now I think I should have probably had my stop at break even on that, but I didn't. -20 ticks. And then I had to make that back. And right here, I picked up 12 ticks to get me to -8. Break even there, and then another 5 ticks there to get me to -3. And that was all that I did, it looks like. Actually, I took some more trades up there, break even. So I missed that. Really nice trade there. Those really nice trades there. that one there, the outer bands were kind of flat. I probably wouldn't have done that anyway. That should have been a break-even trade if I'd gotten into it. This would have been a great trade right there. But then we're getting into the break. Like right here, we're starting to get into the break. So there were two nice blue arrow trades on the NQ during the break. And that was it. All right, so that said, we have, let's see, go back here for a second. On the NQ, we had a lot of movement on the NQ. We had a lot of blue arrows. I just didn't get them. So we ended up with -3 ticks on the NQ and 0 yesterday. This is like the slowest start ever for the NQ. -$15 right now. And it's a slow start anyway. But last month, you know, we're up $4,800 on the NQ only with one contract. 3,400 the month before that, 7,900 in January. So the NQ is our go-to market typically, and so far this month, it's not really produced anything. So that's why we have low numbers right now. We will get it eventually. I'll pay more. I'll focus on it more. I haven't been focusing on it a ton right now. But if you've not taken a free trial with us, go here to mytradingiq.com and click on the purple button. No credit card is required for the trial. Do that, be brought to this registration page, fill out the form. Down at the bottom, it's got a spot to put in your TradingView ID if you have it, and a spot to put in your Ninja Trading Machine ID if you have it. Okay, if you do all that stuff, we will get you set up and going with indicators at the beginning of your trial. All right, let me bring the question box up and see if anybody's got any questions for me. I don't believe there are any. No, there are no questions. All right, so we're going to get the live stream going right now. Okay, before I forget, we'll start the live stream up. And here it is. All right. So I'm going to publish another video idea, but I got to kind of have a plan for the video idea today. So what I think I'm going to go through in the live stream is a little bit about bigger picture stuff, all right, and how you can use our bigger picture stuff. I mean, our smaller time frame stuff with the bigger time frame stuff. Okay, I'm still going to take trades as they come up, but right now, let's just take a look over here. This is what Bitcoin looks like today. Bitcoin was getting hit pretty bad today. I was expecting it to finish this run up here and do a higher high, but it failed on the way up. And this failure here, it brings it back down. If I were to draw a trend line right here, you'd see brings it back down to that trend line right now. It's a good bouncing point. It might go sideways a bit like it did over here, you know, where it tried to go up and then it failed. And then it finally went up and it hit that prior swing high and then it failed. And then it put a new high in and then it failed big time. And then it just started to take off after that. It could do all that again right now. The halving, I believe, I don't know when the halving actually is, but I know it's coming up. Not too long. That's what Bitcoin looks like right now. And I haven't looked at it over here on the TV trades, but what we do have over here is the Mr. on the daily. And Mr. got hit again today. Let's look at this on the 30-minute. Okay, so on the 30-minute, we had back here on the 25th was asked long opportunity from TV trades on Mr. It gave a shorting indication over here on the 28th, and it hasn't given anything but the shorting since then. You've had a couple of gaps in here. I mean, I suppose it's got some gaps it's got to fill all the way over here. Still got gaps to fill, and there's probably more than that. If you keep looking left, there's probably a bunch more gaps than that down below because it's been on such a tear. That is Mr. Let's look at the Bitcoin on the 30-minute here. Bitcoin. BTC. I don't want to look at it. I don't look at that. I want crypto. Here it is. This is what I wanted. All right, so this is what the Bitcoin looks like on a 30-minute. It had a short back here yesterday at 11 p.m. last night. It had a short right in here, short indication. Had a long in here. Now the stop on that would have been right here. So it really didn't go anywhere. The long didn't go anywhere, and it would have stopped you out right there. And triggered you into a short right here. You could have gotten it all back and then some. Yeah, we're not really showing much on the long side here for this right now. But it's all right. I think it'll recover pretty soon here. I don't know when, but pretty soon probably recover. All right, so back in here. All right, I'm just gonna hit the publish button and I'll start going over some things here. Okay, I'm gonna record my video idea. Continue publishing, and hang on. Let me not do this yet. I'm gonna wait. Just shut that off for a second. All right, so I should still have, yeah, everything should still be audio here. That's good. Looking here at the gold right now, let's go back to just 4 items here. The gold from this green arrow here needs to put in a higher swing. If we didn't have this green arrow, we could have taken the trade right here. I'm not sure who's watching out here right now, but if we didn't have that green arrow, we could have taken the trade right there. Because the pullback and hit the Ruben and the black was in the green. But because we have the green arrow, it has to put in a higher swing to take another trade in that direction. Remember, the reason we do that, is because every move up should exceed the trend. It should exceed the prior swing high and continue the trend. Every move up should do that. If it fails to do that right here, if it fails to do that, and then the pullback goes down below this level right there, then you have a running top, okay? And the end of the trend is right there, right? At least temporarily, the end of the trend is right there. So we needed to get up here like this right now to have the trade in that direction, okay? That's what we needed from this green arrow right here. The green arrow gave enough to take profit, get in there and take some profit, but it hasn't continued the trend yet. So until it does that, you don't have a trade there. Okay. Just go down to HIJ. Okay. I'm just looking at the people that are in here right now. See, no, John was in here, but he's not. All right, so right now we need to pull back down and test the ribbon. Right here we need to pull back down and test the ribbon. Over here, we need a higher swing before it tests the ribbon. Okay, we have higher swings on the other 2 markets over there, the ES and the NQ. Now, does anybody have any questions or anybody want to see any other markets besides what we're looking at here? If you want to see anything other than what we're looking at, all you have to do is tell me. We almost have a trade set up here on the NQ. These green lines that you see here are these target levels. All right, you can see that all the target levels were hit from the last blue arrow, which is when they were issued. The target levels are based upon the blue arrows. When you get a blue arrow, you get other targets. Okay. Every time you get a blue arrow, you get a new set of targets. So right now, these were the targets that were triggered from this blue arrow. And if I minimize it like this, you can see that we hit all of them. First one, second one, third, fourth, and fifth, all in one spot like that. So right now, if we get an up close on this bar, it will give us another blue arrow. Okay. There it is right there. That's what I was looking for. Ken, Bert was up to fix your CRN indicators within an hour of your call. Awesome work. Good till 2030. Okay, that's good. It was just that entitlement. That's good. I'm glad that's all it was, Ken. So here it is. I missed this trade right here. I tried to get in, but I was a second too late moving stuff out of the way. You can see my order is right there. It's about to get triggered. I got to cancel it. It's too late to get in now. But I was just a second too late putting that on. It did go up enough to get the stop to break even. That's why you can't get in right now. But from this blue arrow, you see it just issued all whole new set of targets. Okay, so 339.75. Let's just check that. Wait, what is this one right here? 292. Actually, it should have issued a whole new set of targets right here. Don't know why. It looks like it didn't. But let me just shut that off. Turn it back on. Oh, right there. 328. That's what it is right there. 292. What the heck, man? Is it working on? It's working on something else. Maybe those lines aren't the same thing. Anyway, the targets are issued off of the blue arrows. I know that that is the case. So from here, the next target up is not 292. It's going to be up at 328, which is right here. That is 328 right there. Okay. I don't know what this one is. That one's throwing me off, but that could be something that I drew in the. Yeah, it looks like it could be something that I drew in. Oops. Nope. It was not something I drew in. Here, I'll put it back on. Okay, it's getting a different point of reference right now. But the 328 was the next level up right there. And then 339.75 is, oh, I know what it is. It's left over from a different blue arrow. So this is drawing the 5 levels up right here. Right. That one, that one, that one, that one, and that one. The next level's above us. Okay, I see what it's doing here. So new set of targets based on this blue arrow. That's what happened. If you get rid of those lines, then it won't be confusing. Come in here and shut those lines off. Like that. There it goes. So that did put in a higher swing, and now it's pulling back down right here, and it needs to hit the ribbon to give us another trade. Over here on the ES, it also put in a higher swing. It's going up to the midpoint. That's what the dashed red line is right there. Now this is barely put in a higher swing right here. It's not showing real strong trend, but it's got a low here of 90.75. So you'd be buying 94.75 on that right now. Okay, now it's gone down even further, so you'd be buying a little further down. 89.50. Now it's probably not going to be in the trade. If we close down on this bar, I think it's going to disqualify the trade. If we close up, it could give us a green arrow. It's 89.25. It'll be up to 9.25 up to 93.25. Add 4 to the bottom of the bar. Right. See, that just closed down. I think that's going to cancel the trade. 88.75 up to 92.75 right now. Okay. All right. So let's here's the up close, and it is a green arrow. All right. It's a really deep pullback for this green arrow right here after not a strong showing right there. So this isn't your highest probability green arrow right here. I'm just going to point that out to you. Okay. See how this pullback right here was below the low of that bar right there? It's a really deep pullback for a green arrow. Just want to point that out. But it's worth saying. Over here, see why? Over here right now on the ES, we want that to pull back down and test the ribbon. Right, we want that to pull back down and test the ribbon right here. Now, the NQ is getting a deep pullback right here, and that's kind of what I was expecting after it put in any kind of a strength move right here. Well, it is what it is, but just wait. On the ES, we want that to pull back down and test the ribbon. It hasn't. And on the gold, we want that to pull back down and test the ribbon. I really would like to see a higher swing around the gold too. Right, we didn't get that. So, wait. And all right, the ES is pulling back down to test the ribbon here. And we will hopefully get a bounce off the ribbon. I don't know, the NQ is turning down. And that's kind of what I was expecting with that. All right, so we've got a low here right now of 47.25. We would have a high of 49.25 is what we'd be buying on the ES right now. And over here on the gold, we want that to pull back down and test the ribbon here. And the gold is starting to pull back. And what time is it right now? It is now 1:15. So we have 15 minutes left. Right, 47.25 with 49.25. Yeah, that entitlement thing. That is, I think, Frederick right now. Is Frederick in here right now? Because he was having the same issue, I think. Okay. But he's not here. All right, so the NQ is pulled back up to test the ribbon right now. I'm going to hit, well, I'm going to look for the opportunity to sell short on that. The ES was still looking to buy up at 49.25. I don't like these going in opposite directions like this, but we have trade opportunities just about triggering on 3 different markets right now. The 88.25 down to 84.25 on the NQ, and over here on the gold, it's low of 80.9 up to a high of 81.7. And on the ES, we're still looking at 49.25. Okay, those are the markets that are about to trigger. Okay, this right here, even if it doesn't pull out of the overbought, it would still be a trade here on the NQ. On the down close, okay, it did pull out and it gave a blue arrow, so that's a valid trade there on the NQ. And we have one triggering, just about to trigger right here on the NQ. I'm going to throw my stop and break even on that. And I'm actually going to start locking in some profit because I've been pretty slow on my NQ today. And we have a 30-tick target set on that. We're down at the swing low right now, so I'm going to lock in a little bit more on that, right? And I'm going to take 12 ticks. I think it was 11 ticks. But we're at the pivot right here, the swing low that got us into the trade. So that's when it's usually going to bounce back a little bit. I just wanted to lock in a little bit more on that, and I did. We didn't trigger into the ES yet, and we didn't trigger into the gold. Did I put the gold on? I did put gold on, but it's not in the right place right now. 80.6 right now, 80.6 up to 81.4 is what it can have. 80.6 up to 81.4 is what you're looking at on the gold. Okay. Now it's got a low here. Yeah, so 7 ticks higher is going to put it right here at 81.3. Now this is not a guaranteed trade the way that this one over here was, because we have hit the black line in the pullback right here. So the black line is not going to be in the green anymore. It has to come out of the oversold to be a valid trade here. I think it's going to, right? I think once it paints, it's going to. And it actually didn't. That's not a valid trade. It gave me slippage too. It's not a valid trade right here on the gold. So I'm going to get out of it when I can. I accepted the risk for right now, but it's still not a valid trade. The ES has not changed. Yeah, 48.25 now on ES. So on the gold, if this bar moves up and closes up, it's going to probably pull it out of the oversold, and then it will be a valid trade, and I'll have a great entry on that. But this just put in a lower swing, so that's okay here on that. We want to see a pullback over there. This is not a valid trade here on the gold. I'm going to stop now. I'll leave it there. You can watch me stop. On the ES right now, 46 up to 48 is what you're looking at on the ES right now. Okay, 46 up to 48 on that. And on the NQ, we now have even lower swing right here, and we need that to pull back. So the one thing I wanted to look at with you guys really quick, let me slide this over to the side, and I'll let you know if that does work out to be a stop out. I'm going to hit the publish button right here, and what I want to look at, what I want to create for my record video idea is I'm going to show this and allow and that. All right, so what I wanted to look at here was a couple of things. Now we have these things called weekly trading zones, and if you look at them on the bigger picture, I have them here. These horizontal black lines are the weekly trading zones, and they're areas of support resistance. So typically, when we start out the week, they come out every Monday morning at 6:15 a.m. And when we start out the week, you get your weekly trading zones delivered to you Monday morning at 6:15 a.m. and they're good for the entire week. If on a Monday or a Tuesday of the week, I'm just showing you this on a different thing here so you can actually see it. This is a daily chart of the ES. All right, if on a Monday or Tuesday of the week, you happen to be at the lowest weekly trading zone, and we are, it's Tuesday, and we are at the lowest weekly trading zone. Typically by the end of the week, price is going to go to the other weekly trading zone. The other end, or pretty close to the other end of the zones. So just if we look at this, I backed it out too far for you right here. If you look at this little bit of information right here on the daily chart, you can see that price has come down and it's hit this level right here, which is a weekly trading zone, our lowest weekly trading zone, and it's hit the BBC. Now, after price moves up above there and comes down here and hits the BBC, typically when it breaks above the BBC and comes back and hits the BBC, it's going to bounce off the BBC. And the normal spot for it to bounce would be at least back up to the MA1, which is right in here. One other indication here was the black line dropping below the MA1 right there was the other indication. And that put us all the way back down to the BBC. Whenever that happens, it usually goes down to the BBC, tests it, and then runs right back up. So at this point in the week, typically we would say buy some call options right now on the SPY if you wanted to, because by the end of the week it'll probably be back up toward the other weekly trading zone. I'm thinking it's going to get back up here within the next couple of days. It'll be back up here to 5,300 is what I'm thinking. Now, when you're thinking of this, this is the bigger picture stuff, right? When you're thinking of this in the smaller picture, there was a question that came in our room this morning. One of the guys had asked about, can you form a bias based upon that? And yes, you can, but 100. So, in the smaller time frames that week within here, you're going to have plenty of opportunities to go in both directions, to trade in both directions. I'm still in that gold trade, guys. That gold trade is still going right here. I'm actually going to go check that really quick. Yeah, here it is. Okay, so it is a valid trade right now. We are in at a good point at it. So I'll leave that over here. You can watch that. But one of the questions was, can I form a bias and be really careful about taking short trades and only take long trades? Or let the long trades run. And you can let the long trades run, but in the smaller time frames that we work in, 100 points is a lot. 20 points is a lot, but 100 points is a ton. And 50 or 60 points, that's a lot too. There's a lot of room between right here, 52, 55, and up here at 52.95 for you to get some really good trades. The gold is now starting to run. Okay, so I didn't end up stopping out on that gold earlier. It did end up becoming a valid trade. Let me manage this trade here on the gold, and I'll get back to what I was talking about. All right, so on the gold, from this arrow right here, the next target up is 81.9. All right, so we've already hit the 81.9. The next one up is 82.2, so we just hit that one. The next one up is 83.5, which is right about here, is the next target up. So I'm going to start locking in some more profit on this. I'll explain why I'm at 16 contracts. But the next target up is up here in the target table. 83.5 is next, and then 85. All right, so we just got out with some pretty good profit on that trade. The reason we took this trade is because we had the blue arrow. Now I took it early on this bar right here, but that was an accident, and I actually got slippage. And the way it ended up working out, I was exactly the right spot. I entered in, well, one tick higher than this bar right here. This was the actual trigger bar, and I did take some profit on that. The targets are triggered off of the blue arrows. Whenever you get a blue arrow, it's going to trigger a new set of targets. Like this one over here just triggered all these new sets of targets. And and so on the downside from here, the first target was 271.75. We've already hit that one. The next one down is 260.75, so that's right down here. And then after that, 31.25, which is way down here. And then after that, 15, which is way down here. Those are the targets that got triggered from this blue arrow right here. All right. I got a little sidetracked from the explanation that I was given. I was given that explanation for the video idea, all right, because they have us doing these video ideas now instead of live streams. And they like to have kind of an idea of what you're going to talk about. And what I was going to talk about is trading the smaller time frames in conjunction with the larger time frame expectations. So in here on the ES is primarily what I was looking at. And let's bring this back up here. So we just had this long trade here on the ES. This finally did trigger long here. It ended up being 47.50 was the spot. I've been looking for it to get long up here at 48.25. All right, initially I was looking at 49.25, and then I was looking at 48.25. Any long trade that you have, when you get a blue arrow like this, it's going to give you a list of targets. Looking left, if you don't have any levels on the left, swing highs, pivots on the left, it's not going to give you any targets at all. Then you have to use another thing called price action. All right, you have to use leg lengths, and the price action is what determines the leg length. You'd have to do something like this. If you had no information on the left side, you'd have to start using things like this. All right. And this is all part of our lesson plan. This is part of tomorrow's lesson plan, actually, the Wednesday lesson plan. If you haven't taken a free trial with us, I haven't said this yet, but if you haven't taken a free trial with us and you want to, go here to mytradingiq.com, right here on the purple button. Click that. No credit card is required for the trial. That will bring you to this registration page. Just fill out the registration page. First name, last name, email, phone number. Down here at the bottom gives you TradingView login ID. Again, no card is required for the trial. So, yeah, that's how you take the free trial. That's how you get access to the indicators. When you get access to the indicators, you get access to the weekly trading zones and access to the lesson plan. So we're going to go into more detail on that tomorrow. The lesson plan, let me just show you. This was day 2. So today we went over the BBC, the ribbon, and the context. And this was yesterday in the lesson plan. We had bar types, range charts, tick value, different trading platforms. Up, close, down, close at the top and close at the bottom, because those are not necessarily always the same thing. Sometimes they are, sometimes they aren't. Support resistance, trend trades versus counter trend trades. And tomorrow we're going to be going over leg lengths, bar colors, and some other things. Slingshot, divergence, separation, and these indicators down here at the bottom. All right. So we have good stuff we're going to be going over, and it all applies to what you would have to do if you didn't have targets in here. But back to the bigger picture stuff. We anticipate that we're going to have a move, probably a 50 to 60 point move up by the end of the week. So if you are trading on a smaller time frame, should you only consider long trades? I don't think so. I always say just trade what's in front of you. You know, if you're using our indicator set, you understand based on the outer bands here whether you're in a trend or not. Right? That's what these outer bands are for. It's not like a Keltner channel or anything like that you might have seen, or Bollinger Bands or anything like that. These are here to give you your long-term trend, right? Your long-term trend. That's what those are there for. And if they're spread out and going up, long-term trend is bullish. If they're spread out and going down, your long-term trend is bearish. If they're blue and going up, your long and short-term are bullish. If they're red and going down, your long and short-term are bearish. You know, the ideal trade setup is going to be, if they're red and going down, you have a bounce off their ribbon. Okay, any one of these black arrows here, when it's red like that, hang on, let me just do this. Hang on. Muted. Okay. When they're red and going down like this, any bounce off the ribbon when they're red and going down like this is a really high probability trade. The black arrows are higher probability when they're red and going down. But anytime you get a black arrow, you want to make sure you have enough room between the black arrow and the prior swing low, right? So back to what I was saying earlier, trade what's in front of you. Like, this is the ES trade that we were looking for a few minutes ago. We're looking for the up close off the ribbon right here. The green arrow is the trigger. Now the actual entry point should have been here at 47.5. All right, mine was not at 47.5. I had left my order on at 48.25, and that's where I ended up filling. It hasn't gone enough into profit yet for me to bump my stop to break even. I left my order on at 48.25, and that's where I ended up filling. So that was kind of a mistake on my part. Now the DOM is suggesting it's going to get up to 52.50. Learning how to read the DOM is something that's important. It's a really simple process, but it's something that's important, and that's something that we teach in Thursday's lesson plan. So yeah, if you want to learn how to do all this, you don't know how to do all this, you just need to ask questions, get in here and ask questions. And you haven't taken a trial, then just get in and take the trial. Anybody that's watching the live stream right now, if you have any questions or want to see any other symbol, all you have to do is say so, all right? And we'll look at other symbols for you. Yeah, so I wanted to point that out. Hey, I wanted to mention one more thing about this. Now, I'd said, you know, call options. Usually, if this happens, usually by the end of the week, call options are up very well. Usually 32 to 300% by the end of the week. If you're to buy call options here at this point, another thing that you can do is buy micros. Right? If you were to buy a micro, then you don't have that element that you have with an option. Like the call option that I'm talking about would be something that expires like next week. But if you're to buy a micro in here, then you don't have that time element. But you also don't have the maximum risk element. You know, you kind of have to babysit it a little bit, because, you know, if you leave it open overnight, you know, the margins go up overnight, but I don't think, you know, for micros, the margins aren't very much, like $1,100 or something like that. But that's another option, because you're going to get probably the same bang for buck. Maybe not the same, but you're going to get some bang for the buck anyway by having a micro open. You won't get like 100% or 300%, but, you know, if you put in $100, it might move up enough to give you, 50 points with a micro is like what, $50, something like that. I don't even know, but it's something like that. So if you put in risk, whatever, $100, the chance of making that $100 back is pretty good with a micro. Now, options is going to be the way that, to make the bigger bang for the buck with the options. You have guaranteed risk. The maximum amount you risk is what you pay to buy the options. I'm not suggesting you sell anything. If anything, you'd be selling puts right here, but I'm not suggesting you sell anything. If you were to buy options, your maximum risk is what you paid for the options. All right. Sorry, sidetracked there a little bit. All right, so the CS trader is still trying to work itself out. Again, what it should do is get up to the prior swing high. It looks like it's trying to get up to the midpoint. These dashed red line here is the midpoint between the weekly trading zones. And that is another important area of support or resistance, depending on what direction you're coming at it from. Okay. Let's see, it's 1:32, so I got to wrap this up, guys. I got to wrap it up. Well, again, if you haven't taken a free trial with us, go here to mytradingiq.com. Right here is where you sign up for the free trial. Click on the purple button. No credit card is required for the trial. It's going to bring you to this registration page. Just fill out the form, and down here at the bottom, it says Join Webinar in Progress. I'm sorry, down here at the bottom it says TradingView. Please provide your username or a login ID. Do that so we can enable the indicators for you. All right, the only way to get the indicators active on your desktop is to sign up for the trial. All right. If you're in here, you want to hear both sides of the conversation, you're watching the live stream. We also stream live on YouTube right now. We're streaming live on YouTube. If you go to youtube.com/CFRN, and like Nancy, you'll be able to see all this streaming live on YouTube at the same time right now. Okay, that's youtube.com/CFRN. This live stream right here is going to stop at the end of this week. We're not going to be able to do this stream anymore. The one we do in the morning or the one we do in the afternoon. So they come up with another program for that. All right. So that is it. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne is still muted right now, but I'm going to unmute him.
Unmuted.
I know that I muted him. There, Dwayne. Nope. D, you there?
Muted.
Okay, he's still on the phone. So I don't want to stop that yet. So we'll just keep trading right here. All right. So over here on the gold, it's pulled back down to test the ribbon, but it hasn't put in a higher swing from this blue arrow with this green arrow right here. We haven't put in a higher swing. So we're looking to do that. And so we're looking to do that. We want this to actually get up to the prior swing high and the midpoint. Over here now, we had this green arrow here that just barely put in a lower swing. We had this green arrow here that still hasn't put in a lower swing. So we're not going to take anything on the short side until we actually get a trend going here. And what that means, for those guys who don't know, is the markets are always going up and down like this, right? So what we have going right here in this little piece, so every move has to exceed that prior low to continue the trend. All right. And what we have going on right here, oops, I need to do something else. Just give me a second. I hit erase all drawings. And what we have going on right here is it went down like this, then it came back up. Then it went down like this and just barely exceeded it. Then it came back up and then it went down here. It has not exceeded it. Came back up, it's still not exceeded. So all this right here, all that stuff in the middle of that is what you don't want to get into right here. Okay. You want to stay out of this. All of this.
Unmuted.
Here that didn't put in a lower swing. Anything after that. Yeah, I did. Yeah, we're ready to pass it back out to you. It's 1:36. So yeah, that's okay. That's okay. I muted it because you could hear some of it, so I just shut it down for you. All right, so I'm ready to pass it back out to you if you're ready. Okay. All right, there it is. Okay. Today it took, let me just go check. Hang on. It took 14 minutes and 4 trades to get to $1,840. Thank you. Thank you. All right.
Now, everybody on YouTube just didn't hear me for the last 5 minutes. I'm sorry. Nothing I can do about it, but just keep moving forward. Okay. If you go listen to yesterday's broadcast, you'll hear all the same stuff. I say the same stuff every day. Why? I already explained that. Daily chart, S&P, daily BBC. Okay. Now we've been talking. Last time we crossed BBC was way back November 2nd. Previously, we were in an extended downtrend that ended October 27th. After this red day, October 27th, got a green day. And a green day and a green day. And then we crossed the BBC. Confirmation came on November 3rd when we opened and closed above the BBC. Now, price rarely travels in a straight line. Leg retracement, 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 leg. Now, there was such a bullish tempo that these pullbacks didn't make it all the way to the BBC. This one did. Big question, is it going to hold? Okay, see here, this red candle pulled all the way back to the BBC. So did this one. But price continued higher. Now we're off the low of the session. Okay. Why are we even looking at a daily chart? Nobody trades a daily chart, right? Wrong. Institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why? Because of their account size. The size they trade in literally moves price. You ever wonder what makes price move up and down? Institutional traders, okay, and the size that they trade in. They can stay in a profitable position far longer than you or I might be comfortable with. And they can weather a much deeper drawdown than you or I would be capable of. But they are the ones responsible for moving price. So no matter what you trade, whether it's futures, any futures market, individual stocks, crypto, Forex, ETFs, if you learn to spend 2 minutes with the daily chart before you go to your smaller time frames and start trading, you'll know which way the wind is blowing. Okay? From the moment the markets opened last night, the top of this candle, well, we had a southerly wind, right? Till we hit the BBC. And then we bounced. Now, we haven't bounced a lot, but this is an incredibly important inflection point in the market. Just as this was, and this was, and these were, and this was, and this was. Okay? If this pullback holds, we will continue higher. Now, the fact that this low put us to our lowest weekly trading zone for the week, that's another reason, and I know Michael discussed it a little bit, why we would anticipate potentially higher prices after this huge rout, this huge sell-off. Now, the driving force behind today's sell-off was the economic news that came out this morning. Okay? We don't recommend trading news. Let the news come out, the economic reports. Let the market digest that information. And then trade the reaction to the news, not the news itself. If we come through the BBC, the next area that we should expect support would be the low of March 19th. Below that, the 62% fib extension. And this low right here, low of March 5th. And then we're at the 50% fib extension and the 24% fib retracement. From the October 27th low to the new all-time historic high put in yesterday, April 1st. Okay. This is the shallowest possible Fibonacci retracement. We haven't had a 24% fib retracement since November of last year. It's been up, up, and away. You've heard me say every day that we're long overdue for a substantial correction. Will it come this week? I can't tell you. I don't have crystal balls. But where I do eventually see price, at a minimum, is at this 50% fib extension. You just have to be patient and trade what's in front of us based upon what we know and understand. As I said, all alerts are created on the 30-minute chart. The vertical line you see here separates today, Tuesday, from Monday. Then back over here would be Thursday because Friday was a holiday. But these zones that you see, yesterday you saw last week's zones on my chart, but today you're seeing the zones that came out yesterday morning at 6:15 a.m. Eastern. The ES came down to the lowest weekly trading zone, 5235/36, and found support. The actual swing low was exactly 5235. Again, that's based on the zones published yesterday, which will remain the same all week. No changes. Okay. Now, here's the opening candle last night. It was 10 minutes into the life of this candle that I published the CTAs. We never broke above the BBC. We consolidated for hours at the weekly trading zone. A lot of hours. The zone is 87/88. And from the open, well, from 6:30 last night until 6:30 this morning, that's 12 hours of consolidation. Only 3 things happen at a weekly trading zone. 70% of the time, it's consolidation. Like that. Like that. Even like that. 20% of the time, rejection. This isn't a great example of rejection, but it'll have to do for them. 10% of the time, you get the slice. That's when price slices through a zone on the 30-minute chart like it's not even there. Now, what typically happens, let's see, this was part of a consolidation period. So, but that's what it looks like when price breaks through a zone. But typically, not every time, but most of the time, price will retrace to the zone it sliced through and then continue in the direction of the slice. When price drops to a weekly zone, we expect support until proven otherwise. When price rallies up to a zone, we expect resistance until proven otherwise. The zone here was 25.26. We traded a little bit above it, but then quickly came right back down and consolidated for quite a few hours until we caught our drop. Okay. Now, when the market found support here, did what it will always do, go look for resistance. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. I already explained it stands for bull bear cross. When price crosses above the green line, we're bullish and anticipate higher prices. Price crosses below the green line, we're bearish and anticipate lower prices. But when the market finds support, it will revert to the mean or pull back to the BBC. The pullback holds more often than not. This resistance sent us to this support. This support sent us to this resistance. This resistance sent us to this support. Back to resistance, back to support. And then we finally hit the lowest zone of the week on a Tuesday morning. Okay? To the tick, and we caught a bounce. When the step line crosses red and falling, see, on the way down you had what I call the perfect stack. Price, step line, red and falling, BBC. When you've got that, there's only one thing to do. That's get short. Okay? But once that step line crosses red and falling, see, the black line's on the left side of red and falling. Now it's on the right side of red and falling. So what's about to happen? Price is going to retrace, most likely, to the BBC. Question becomes then, what will happen when price gets to the BBC? Will the pull up or pull back, however you want to word it, hold, or will price trade through it? Now, as you can see, the pullback holds more often than it doesn't. Here, here, here. Pullback holds more often than not, but eventually it won't hold. And price will trade through it like it did right there. Pullback held, the pullback held, and then price traded through it. Which gave you a perfect stack yesterday. And where did the market find support? At the zone. The zone bounced us up to resistance at the BBC. Resistance at the BBC sent us back down to the zone for consolidation. Remember, when price encounters a zone, 70% of the time will be consolidation. Down we go. Lowest zone. What happens if we trade below the lowest zone? Well, based on history, almost 15 years, even if we trade below the lowest weekly zone, as we've already done on the Dow, by the end of the week, we expect price to be at or above that zone. Now, because we've hit this on a Tuesday, so early in the week to hit the lowest zone, there's a high probability, based on what we've experienced live in real time for the past 15 years, almost 15 years, there's a high probability that price will be at the other end of the spectrum. Is that the highest zone? 53.76. It is. Okay. Maybe we don't make it all the way to 53.76. Maybe we end up here where the bearish cross took place. There's a bearish cross that leads to an extended move the first time price revisits the area of the cross. Right there. It's almost always good resistance the first time up. Same thing is true of a bullish cross. Okay. Just in the other direction. So you see this green candle here? Once it takes out this high and this high, and it gets to this, see, you've got a high right here. It's lined up perfectly. BBC. Below the BBC, look for short trades. Above the BBC, look for long trades. Did we hit our short target? Well, yes. Okay. Now our members and trial members had these numbers 10 minutes after the open last night. Now we are way below the lowest weekly zone. As I said earlier, I'm pretty sure I screwed this up, but I have a policy. Once I post the zones, I don't tinker with them, okay? I want everyone to have the confidence in the zones that I have, that those who've been here for the last 10, 12, 13, 14 years, that they have, okay? So I'm never going to go in and tinker with them. If I make a mistake, I'm human. I made a mistake. Okay, life goes on. Now, we had the perfect stack coming down, took out the lowest weekly zone. Step line has crossed, so we expect to pull back to the VBC. Question is will the pullback hold? You see, when it pulled back here, it held. Resistance sent the market to support, blue and climbing. Back to resistance at the BBC. Back to support at blue and climbing. And then we traded through that support. We hit the short target. So price has a lot of work to do to get above this lowest zone, but it does have the entire week to do. A lot of the sell-off today was a knee-jerk reaction to the economic data. So cooler heads will prevail, and we'll see what happens the remainder of the week. I'm not saying we can't go lower and continue lower, because remember, big picture, this is the number I'm looking at. Whether it happens off of this move or not, I can't say. But we will find out day by day. On the Russell, okay. The Russell has taken out its lowest weekly trading zone. Here's where we opened last night. Price is trapped between resistance and support. We pull up to the BBC. The pullback holds. Yes, we spiked it, but all the candles are still touching. So as long as they're touching, that means it's holding. And then we get our drop. Okay? You only need 2 points in the Russell, just like the ES. The Dow, you need 20 points. The Russell, the ES, you just need 2 points. Okay? So from 21.21 to 21.19, you're done for the day. Or you could have recognized that, wait a minute, that's a perfect stack. Why don't I just get short, let it ride? Now, we preach to you guys, get your goal for the day, put the mouse away. But there will come a time when you can't remember the last time you didn't get your goal for the day. When you get to that point, if you want to start thinking about these bigger moves, okay, great. But first, master getting your goal for the day. Now, as I said earlier, there's almost 16,400 individual handcrafted alerts in the Logic 247 channel. And over 295 weeks, we've averaged 20% or less of the alerts being stopped out. Based on market structure, simple process we teach all of our passport holders. Now we've gotten below this zone, the step line has crossed. So, what do we expect? Price to slowly inch its way up to the BBC. Now, if price chooses to consolidate sideways and the BBC has to drop to meet price, that's a very different dynamic. Okay. In fact, if that were to happen, there would be a greater probability of price getting above the BBC than if price just rushed up to it right now. If price just rushed right up to it, it would probably get slapped right back down to the zone. But if we consolidate in this area and the BBC drops to meet price, then there's a much higher probability that price will get above BBC. Okay. All right. NQ. Not the lowest weekly zone. That's the lowest weekly zone for the NQ. But what did the NQ do? Here's where we opened last night. Below the BBC, blue and climbing right below. Right, see the zone, the BBC, that's resistance times 2. Blue and climbing represents support. Okay, we dropped a little bit below our support, came back to resistance. Basically, we just consolidated along the BBC. We reached up and we hit the zone a couple times. Remember, you only need 5 points in the NQ to get your goal for the day. 5 points. So from 18,480, 493 to 498, that's 5 points. $20 a point, that's $100 per contract traded. Once you're in the right to trade 5 contracts, that's $500. 10 contracts, it's $1,000. It's all in the 2420 blueprint. And when you become a passport holder, you will receive a copy of the 2420 blueprint. It's designed to do 3 things. 1, help you write your business plan. 2, help you write your trading plan. Number 3, help you go from 1 to 20 contracts over a period of 24 months. So get rich quick. You gotta show up, roll up your sleeves, go to work, ask lots of questions. And pretty soon, when you look at a chart like this, you instinctively know what the next high probability move is. Now, everything I've already said about this, step line crossing, look at red and falling. It's now curled up and turned to blue and climbing. That's bullish. Red and falling is bearish. Blue and climbing is bullish. Now again, we still have one more weekly zone below on the NQ. That covers all the indices. Let's go to crude. Here's where we opened last night. Pull back, but we didn't get all the way to the BBC. Red and falling turned to blue and climbing. That's a sign of strength. Okay. So this candle right here opened at 84.01 and went to 84.10. That's $90 per contract traded. This candle opened at 84.01 and into 84.10. It's $100 per contract traded. And eventually it went to the zone at 84.15, where we consolidated for a few hours, and then off we go. Perfect stack, price, step line, blue and climbing, BBC, and we run to the target. We overshot the target. But what happened here? What happened here? Well, look left on your chart, and you'll see what happened. Step line crosses, price comes back to the BBC, spikes it. Then we have a candle that opens and closes below it. And come back to the zone. The zone that was resistance becomes support. To the tick, 84.15. That's the low of this candle. Okay. Now support, it's going to send the market looking for resistance. We blew through the BBC. And then what do we get up here? Basically a double top. Price was unable to put in a higher high. So it backed up, got a running start, and now it's trying again. At the moment, we have a high, a lower high, a lower high. So what will be important is if price, which because we're above the BBC, and this red and falling on the next candle will turn to blue and climbing, we can take out this high at 85.23. No reason in the world that we don't go to the high of this candle at 85.33. It's exactly $100 per contract traded. And if we take out the high of this candle at 85.33, no reason we shouldn't go to 85.46, the high of this candle. Before any of that can happen, price has to take out this high. Gold. Remember, the vertical line separates today, yesterday. Here's the open last night. We're above the BBC. We pull back to the zone. Remember, I said this at the beginning of the broadcast. I say it every broadcast. Price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon. Price is trying to get to a zone. Okay. When price is above the BBC, it's trying to get to the zone overhead. Price is below the BBC, it's trying to get to the zone below, where we consolidate it, as we do 70% of the time. Okay. We got a little pop here, but we couldn't take out that swing high. So we rolled over. And that's an unusual place for the market to find support. Right in the middle of this big candle from last Thursday. Okay. Closed that gap. This was yesterday. Now, I say it one more time. Of the 16,000, almost 400 logic alerts, we've averaged on a weekly basis 20% or less being stopped out, which tells you your best work is never going to result in perfection. I'm just telling you now, before you waste years of your life and tons of money, you're never going to become the perfect trader. I don't care who you hire. I don't care what indicator you buy or bought or anything else. There's no holy grail in trading other than learning how to trade. And part of learning how to trade is knowing instinctively that getting stopped out is as much a part of trading as breathing is a part of life. Professional traders waste no time and no energy trying to figure out a way to not get stopped out. They look for high probability, low risk opportunities, and they take the trade, knowing that while they may get stopped out on this trade, and maybe the next one, maybe even the next one, over time, they're going to hit their target more often then they hit their stop loss. We open, pull back to support ×2, the zone and the BBC. We get a leg and a retracement and a leg. And we hit the target. We took out that high. We took out that high from yesterday by just a little bit. Okay, that's a sign of weakness. Look what happened. Price came way back to here. But there was enough bullishness in the marketplace that we didn't quite touch the BBC. We ran up all the way to the zone. Once we hit the zone, resistance, just like yesterday, price drops to the BBC support. Support sends the market to resistance, up at the zone. Resistance sends us back to the BBC support. Consolidate here for a bit. And we make another run to the zone. Get a little bit of a retracement. And we put in a high, 2297.9. Pull back to the BBC, the pullback holds. Now price is attempting to take out this high. 22.95 up to 22.97. That's a $200 per contract trade. 22.95 to 22.97. $200 per contract traded. Silver. Yesterday, about this time, I drew in this window of opportunity and this window of opportunity. And I said, by the time we talk tomorrow, one of these windows will most likely have filled. You can clearly see the one that filled was this one. Boom. We even traded through the window right up to the zone. Got a retracement back to the BBC, but you see we didn't quite touch it. So that's bullish. Now, you only need 2 pennies in silver to get your goal for the day. This candle opened at, let's call it 25.21. And it ran up to 25.30. That's $450 per contract traded. If you've earned the right to trade 10 contracts, that's $4,500. Just don't put the cart before the horse. You got to put together 10 consecutive days in a row in your demo account before you even think about going live. Once you do that, though, the blueprint will give you the green light to go live with one contract. Only one. Now your goal is to increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a second contract. Big difference. The first contract is funded with your startup capital. The second contract is funded with profit you earned in the market. Now, Blueprint will tell you when it's time to add contract number 3, number 4, number 5, number 10, all the way up to number 20. By then, you've got the hang of it. You only add one at a time when it's time. You only add with profit you earned in the market. If you follow those instructions and have the discipline, put the mouse away once you get your goal for the day, that greatly diminishes the chances of you blowing up another account. In order to blow up another account, you'll have to break a whole lot of rules. Okay. Now, we're almost to the highest weekly zone on silver. The indices at the lowest zones, metals, near the highest zones. Now, that's how it was for a long time. And then a couple of years ago, things got sort of confused. I mean, it was like clockwork. If the ES was going up, gold was going down. If gold was going up, the ES was going down. I don't want to go out on a limb here and say, okay, great, things are finally back to normal. Because I don't know if they are or not. But this is how price moves. Leg, retracement, pullback hell. Leg, red and falling resistance. Pullback hell. Leg, we overcome red and falling. Put in this high, then a retracement. Now the current high, which is 26.11. Okay. Now, when the price of silver moves $1 from, let's say 25, what's the high here? 26.11. Okay, from 25.11 to 26.11. That right there is $5,000 per contract traded. Yes, if you've earned the right to trade 10 contracts, that's 50 grand. Okay? But if you're just learning how to trade, stay away from silver. Okay? Margins are high. It can be erratic. It's not the best market to learn. Okay? Trade the ES. Trade the Dow. Even crude. Not that you can't ever trade silver, but get your sea legs first. All it takes is 2 pennies to get your gold for the. And last but not least, on the euro. Here's where we open. We drop to the short target. Consolidated for hours. Then price got above the BBC. Then we got a bullish cross. That's when the blue line gets above the green line. Bearish cross is when the red line gets below the green line. That's bearish cross. That's bullish cross. Consolidated at the zone. Ran up to the next zone. And we tried, or the market tried, but it missed it by a few ticks. Then we retraced, currently consolidating at a zone, remember, 70% of the time. That's rejection, okay? 20% of the time. Now the step line has crossed, so what's our expectation? Either price is going to drop to the VBC, or price is going to continue consolidating, and the BBC is going to rise to meet price. If the BBC has to rise to meet price, then there's a great probability that price will drop through the BBC. But if price right now just were to drop like a trampoline, you go. Right? Seems pretty content right now to just chug along sideways at the zone. Now let's look at the daily. Definitely hit the BBC. We definitely hit the lowest weekly trading zone, but we are off the high of the session, or the low of the session. High of the session is way up here, 296. To become a member, go to mytradingiq.com. If you have questions about becoming a member, call 949-42-EMINI. If someone doesn't answer, leave a message. We'll call back. You can also text us, 949-423-6464. Those are the numbers behind those. If you look on your keypad, you know how you got a number and you got letters? 949-42-EMINI is 949-423-6464. You just send a text message. Hey, I'm ready to become a member. I want to be a passport holder. I want to have a living, breathing teacher teach me how to trade so that I have a fighting chance of becoming the 1 out of 10 and not just another statistic, the 9 out of 10. It makes a world of difference. As a passport holder, you'll also have not only that group training in an interactive environment every trading day. See, even the days that you can't show up for whatever reason, we still show up. You also have access to private one-on-one mentoring. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter because price flow is the same across all of them. You'll also receive the Logic 247 alerts, the Concierge Trade alerts, be able to attend the members only workshop on Thursday night, 8 p.m. Eastern, every week. And you'll get the key that unlocks the vault in Telegram, where all of our previous members only workshops are archived. In fact, when you become a passport holder, you'll get the key to open a lot of the private channels in Telegram. When you're on the trial, you have, and if you're on the trial and you haven't connected to Telegram, I hate to say you're wasting your time, but, well, you could do better, okay? Go to telegram.org, install Telegram. It's free, it's fast, it's secure. And you can actually chat with our traders. You can ask them questions before you make your decision as to whether or not you want to become a part of our family or not. I don't know any way to make it any more fair than that. And you do all that on our dime, not yours. Now, once you make a decision you want to become a part of the family, well, now we'll talk about your dime. Okay? mytradingiq.com. Everything you need to know right here. Let's wrap this up with our good word for today. Last 2 days we've been talking about contrary winds. Today we're going to continue with part 3. Psalm 148:8. Stormy wind fulfilling his word. The winds were contrary when Moses led the Israelites out of Egypt. They were contrary on their way to the promised land, and they were contrary when they got there. There is no such thing as a storm-free voyage. Acts 14:22 says, "It is through many tribulations that we must enter the kingdom of God. When you have to fight to stay afloat day after day, it's easy to get discouraged. Paul said in Acts 27:20, when neither sun nor stars appeared for many days, all hope that we would be saved was finally given up. Now, maybe you're weary and discouraged because of whatever you're battling. You're ready to call it quits. And humanly speaking, nobody would blame you. But before you give up, ask yourself this. What if God is the one engineering this storm to get you where you need to be? What if He is the one who spoke and raised a stormy wind? It's Psalm 107, verse 25. So you would have to keep your eyes on Him. What if He is the one who hurled a great wind on the sea in Jonah 1:4 to see if you would keep the faith when you can't see the far shore? The psalmist tells us God uses fire and hail, snow and clouds, stormy winds, fulfilling His word. Psalm 148, verse 8. In Exodus 10, the Lord directed an east wind on the land all that day and all that night, and it brought the locusts. So the Lord shifted the wind to a very strong west wind, which picked up the locusts and drove them into the Red Sea. Exodus 10:13. One author writes, when the Lord fought for Israel, stormy winds brought about their deliverance. And one day, by God's great mercy, we too shall stand upon the sea of glass and see how stormy winds brought about our deliverance. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.